An accounting information system, AIS, must include certain source documents in order to control purchasing and accounts payable. For a manufacturing organization, the best set of documents should be, remember, we are interested to control our purchasing and accounts payable. Purchasing and accounts payable. First, purchase requisition is drawn up. Let's say our department A needs something. So department A will first raise a purchase requisition, the request for purchase. Once this request for purchase is drawn up, this purchase request is forwarded to the purchasing department. Then the purchasing department will raise a purchase order. Once the purchase order is drawn up, this purchase order is then sent to the vendor, and then this process goes on. So we should start from purchase order, purchase requisition. So it's either going to be A or D. Let us discuss these one by one. If you look at A, purchase requisition, yes. Second step would be the purchase order. Makes sense, yes. Then inventory reports of goods needed. There is no such term. This basically is synonymous to the purchase requisition. Incorrect. Incorrect. Inventory report of goods needed. This is purchase requisition, which is already drawn up by the requesting department. So then it has to be purchase requisition, what we need. A purchase order is drawn up by the purchasing department. The vendor will send the material. We will write up what you call the GRN, or sometimes called the receiving reports. And once we have received the goods, the vendor will send the invoice. Perfect. So that makes D to be the correct option. Next, question number 2. Which of the following statements about an accounting information system is false? Let's see. Question number 2. An AIS supports day-to-day operations by collecting and sorting data about an organization's transactions. Yes, AIS has transaction processing system as one of its components. So this statement is true. T. The information produced by the AIS is made available to all levels of the management for use in planning and controlling an organization's activities. This is true as well. Why? Because information generated by transaction processing system, which is a part of AIS, is used by all levels within the management. Senior management needs it, middle level as well as the lower level. So this is true as well. C. An AIS is best suited to solve problems when there is great uncertainty and ill-defined reporting requirement. This is incorrect. This is incorrect. Why? Because when the reporting requirement is ill-defined, we don't know what exactly are we looking for, and there is great uncertainty, we can't use AIS. AIS works on exactitude, exact numbers, documents. So AIS will fail here. Then what we need here is called the decision support system. Decision support system is an extension to the MIS, and it incorporates information from internal and external sources. It will take in information from economic environment, inflation rate, interest rate, tax rates, level of competition, economic confidence, as well as some information from AIS. Since the information is coming from many sources, our reporting requirements are primarily ill-defined what we need, and there is great uncertainty. So this is something that AIS doesn't, rather DSS does, decision support system. So that makes C to be the correct option. Now, why not D? An AIS is often referred to as transaction processing system. Yes, because transaction processing system is one of the components of AIS. So this is true. C was not true, and we were looking for the one that was false, and it was false. An inventory system on a database management system, one stored record contains part number, part name, part color, part weight. These individual items this individual item, item number 1 individually, item 2 individually, 3 individually, 4th individually, these are called what? Absolutely right. Fields. Fields. Field for part number, field for part color, field for part weight. Correct. Whereas many bytes make up a field. Bytes basically represents characters, right? And many combination of fields gives you records, and records gives you files. So that makes perfect sense. A is the right answer. All of you got it right. All right then. Of the following, the greatest advantage of the database data server architecture. We just learned that a database is a centralized hub of information, and user A, user B, user C, D, E can work upon the same central reservoir of information, and they can draw the information of their need, whatever they're looking for, right? So A doesn't need a separate database, B doesn't need a separate database, C doesn't need. What they do, they simply use a simple server or database, and then they can draw any required information they want. So the greatest advantage is that the data redundancy can be reduced. Data repetition can be reduced. A central hub of information where is minimum repetition, and you can get what you want. This is the greatest advantage of database architecture. Greatest advantage. Now, why not the others? Conversion to a database system is inexpensive. Wrong. It is expensive. It is not accomplished quickly. These two terms highlighted are wrong. Then, multiple occurrences of data. This is wrong. Highlighted part is wrong. Not multiple occurrences, rather we achieve what you call data redundancy is reduced. We have less repetition. So this C highlighted part is incorrect as well. Data security procedures are minimized. Wrong. Now you need more security. Why? Because your information is placed at a central location. Now you need much more security. First it was distributed, so you could just lose one part of it. Now the information is stored in one location. This is highly risky. So saying that data security procedures are minimized, I would say data security procedures are now maximized. You have to have lots of security here to protect the database from this point. Question number 5. Which of the following should, mind the word, not? You have to be very careful when you're reading the question. Except, not. Which of these is false out of the 4 given? So you need to be very sure that you have marked or highlighted what exactly are we looking for in the question. So which of the following should not be the responsibility of the database administrator? Design the content of organization of the database. This is exactly what he does. There is nothing wrong with it. Protect the database and its software. This is one of the responsibility of the database administrator. Monitor and improve the efficiency of the database. Yes, that's one of the responsibilities of the database administrator. Now look at this option. Develop applications to access the database. No, this is something he doesn't do. This is the job of the program developers. This is not what he does. Develop application to access the database. This is the domain of developers, the application developers, system analysts. So that's clearly is not the responsibility of the database administrator. So that makes B to be our correct option. Moving on. Which of the following is a primary function of the database management system? Remember, we're not talking about the database administrators. We are talking about the database management system, DBMS, DB2, Oracle. We discussed different types of database management systems. So, which of the following is a primary function of database management system itself? Report customization. This is done by database administrator. Financial transaction input. This is the transaction processing system we discussed. Your payroll processing, your invoicing processing, and so on and so forth. Database access authorization. Who should access what, who is authorized to do what. This is the job of database administrator. We have identified ACD. Now what about B? Capability to create and modify the database. This is the primary function of database management system. It can modify the database and create new databases as per the needs of the users. So that makes B to be your correct option. Moving on. Which of the following outcomes is likely benefit of information technology used for internal control? So what basically are we looking for? You have a highlighter function in your exam, and you can always, and I highly recommend that you should always highlight what exactly are we looking for. Likely benefit of information technology. So you would be mindful what we are doing. So your exam simulation allows you to highlight a certain part from the question. How it is done, when you can take your cursor to the particular point, you just select the text. A small window would appear here with the highlighter sign. If you click or press this highlighter sign, the selected text will be highlighted. So this will help you know exactly what we are looking for. Likely benefit of information technology. Processing of unusual or non-recurring transaction. Well, this can be done manually. Why do we need a special system for this? So this is not something unique to information technology. Potential loss of data. This is not a benefit, rather it's a disadvantage. We could lose information, data, maybe in the manual system or in computerized system. We are looking for the benefit. So that's the key point. When you highlight, you know exactly what you're looking for. You're looking for a benefit. Then recording of unauthorized transaction. How can it be a benefit? It is not a benefit. We are looking for likely benefit of information technology. Now, what is the benefit? Now we are very sure that we are going to click the right option, enhanced timeliness of information. Since your IT systems work at a very fast speed, so your information will be available much more quickly, more timely than the manual system. So that makes B exactly to be the correct option. Moving on. Which of the following terms best describes a payroll system? Payroll system, what kind of system it is? Database management system? No. It's a routine data processing, so it is not DBMS. It is transaction processing system. Remember, payroll system, absolutely guys, you got it right. Transaction processing system. Payroll is one of the transaction processing system, just like your accounting data processing system. Decision support system, no. We have unstructured information, poorly defined objectives in decision support system. So payroll system is quite repetitive and operational, and similar employees, same number of employees almost in every month they get paid. So when you have consistent data to be processed frequently, for that we use the transaction processing system. And enterprise resource planning, ERPs like Oracle Financials, as well as SAP. Yes, of course, B is the right answer. Payroll system is the transaction processing system. So B is going to be your correct option. Moving on. How is an accounting information system, AIS, which is the topic of today's discussion, distinguishes from management information system? How AIS is different from MIS? Let us discuss every option. An AIS deals with the financial information, whereas MIS handles all other information. This is incorrect. AIS, basically, when we say MIS, AIS is one of its components. So MIS, it handles financial as well as non-financial. So this is incorrect comparison. AIS may either be manual or computer-based. MIS is computer-based. Wrong. Both are computer-based. Both require information technology equipments to process the data. C is absolutely right, Fahad. AIS is the subsystem of MIS. It's a component of MIS. Perfect. This is the correct option. Why not D? Should have a good reason. And AIS is control-oriented. MIS is used exclusively for planning. Wrong. Both AIS and MIS, they are for control and planning. So this is incorrect as well. So we got C as highlighted the correct option. Next, again very important point, always mark what can twist the question around. It's least likely. Which of the following features is least likely to apply to transaction processing cycle of accounting information system? Now, data records are chiefly historical in nature. What we are looking for, least likely, remember. So no doubt transaction processing system uses historical data, past data, what has happened. So this is true. We are looking for least likely. We are looking for least likely. Data records are chiefly historical in nature. This is true. That is what is the case in transaction processing system. Most of the sources of data are an organization's recurring transaction that are repetitive. Payroll is repetitive. Invoice processing is repetitive. Payment to your supplier is repetitive. Collection from your customer is repetitive. So this is true. This is the key feature of transaction processing system, that we have repetitive transactions, historical transactions that happened in the past, today morning or yesterday or the day before yesterday. It's true. Data are usually financial in nature. True. Transaction processing system that processes your payroll, your invoicing, they are all financial. So yes, data are usually financial in nature. Then what about D? Data records are the basis of predictive system. TPS is not a predictive system. TPS simply processes your daily data, recursive data, repetitive data on daily basis. When we say predictive system, we are talking about the decision support system, the systems that help the senior management to take decisions. The information is taken from different sources, external sources on economies, growth rates, taxes, level of competition, interest rates, so on and so forth. So decision support system basically is a predictive system used by the senior management. So this is clearly least likely to be the TPS. That is decision support system. So that makes D to be the correct option, because we were looking for the least likely one. Moving on. Which of the following statement distinguishes a management information system from transaction processing system? Just done this. We're comparing the MIS and the TPS. Remember, TPS is the component of MIS. We just discussed that. Maintenance of structured database. We are looking for a distinguishing feature. What distinguishes these two? Structured databases could be in both MIS and TPS. So this is not something that distinguishes them. Capability to provide data for decision making support or decision support. This is the difference. TPS provides you data processed on day-to-day basis, whereas the management information system, it provides you the data for decision support system, decision making support. So that distinguishes the MIS from TPS. Automation of routine transaction processing. This is done by TPS but not by the MIS. Production reports to support operations. This is again TPS. So this feature here, this option is what distinguishes your MIS from the daily processing of the data. All right, moving on. Management information system represents a significant investment by most businesses. Of course, MIS requires a lot of investment on technology. A primary concern of management is that the system, what is our primary concern? Let us specifically highlight what we're looking for. A primary concern of the management is that the system, let's move in the reverse order. The system was designed by computer-aided software engineering. This is not a necessity. We could have used some other tools other than the computer-aided softwares. Might consume too much time and money during testing. That's an inevitability. When you're developing a system, it would require money and time for initial phases. So this is not the reason. Management information system represents significant investment. A primary concern of management. This is not the concern. This is the requirement. You have to spend the money and time in initial phases. Employ the latest technology Well, it is not always required. Maybe some maybe 5-10 years old technology could work perfectly fine. Latest technology depends upon the nature of the business, so this is not always required that you use the latest, most recent version of the technology or the software. This is again not the prime concern. The prime concern for the management is that whatever system we have, it meet the business needs of the organization. Right? Absolutely right, Subhan. Meet the business needs of the organization. So you should be able to distinguish between the right and wrong option by weighing each option, by analyzing and reading carefully each option. Because as I said, that 40 to 50% questions on your exam would be theoretical. Right? So that's why this is a specific area where you will be tested on theory, your section F and section E, of course. Okay. Which of the following statements about management information system is false? Always remember to keep it in mind, or if you are forgetful, then it should highlight what exactly is the focus of the question. Which of these is false? So we have to find the false statement. MIS supports day-to-day operations by aggregating and formatting data about organizations' transactions. We are looking for a false statement. Remember, MIS has AIS as one of its components, and that's what we call the TPS, that processes your day-to-day operations. So to this extent, it is true. This is true. We're looking for a false statement. The information produced by MIS is made available to middle management for use in controlling and organizing activities. This is true. There's no doubt about that. Now, MIS, which is based upon AIS, is best suited to solve problems when uncertainty is great and reporting requirements are ill-defined. No, we have discussed that. You got it right, all of you. That is basically decision support system. MIS won't help. MIS is simply your daily data produced for different levels of the management. So this is the false statement. It is not suited for when the reporting requirements are ill-defined or when there is great uncertainty. What about D? MIS is often fed with input by transaction processing system. Absolutely right. There's no doubt about that. Since your section F is being tested extensively, so we are going for all questions. F must be prepared very well now. So once our F is over, then our cycle would start from section A, inshallah, in our first week of August. A database is what? We discussed in our lecture previously. Database is essential for storage of large data set. Well, that could be some other system. Maybe it's a TPS, or maybe it's some decision support system. So this is not the defining feature that a large storage data set, if it's needed, then it's a database. No. What is a database? It's a collection of related files. Yes, database is a collection of related files. They are related to one another through some way. So this is the correct definition of database. Database is real time, not necessarily. Some databases work on batch processing. The data is entered throughout the day and it is processed at the end of the day when the banking hours are closed. So it's not that the database is always real time. It could be based upon batch processing also. So this is incorrect. A database is a network of computer terminals. Not at all. That's your network could be in different topologies. So D is not the right option. Then, of course, B was right. The database is a collection of related files. Next. The primary purpose, highlight this one, of the database system is to have single storage location for each what? Let us discuss these options one by one. When we say database, it incorporates different items of data, different data sets. So not file, not record, not the database, rather the item of data that will be combined. Remember, if you remember from our previous class, First we have a field which is made up of bytes. Collection of fields will give you record. Collection of records will give you file, and collections of file will give you the database, right? So basically then what is the basis then? What is the eventual starting point? Not the file, not the record, not the database, the item of data that is incorporated in fields. So that makes D to be the correct option. The basics of the database data sets that constitute the overall database system, so items of data. Moving on, this is a little technical, please try to make sure you understand it well. All of the following are methods of distributing a relational database across multiple servers except, remember the question, all of the following are methods of distributing your relational database, the data that is connected some way, like students' records, their grades, their names, their subjects, distributing a relational database across multiple servers, except snapshot. What is snapshot? He has given you the description. Snapshot is making a copy of the database for distribution. Since we have different servers across our different locations, so the snapshots or the copies of the data might be available at different locations. Just like when I was working in Saudi Arabia, we had a branch in Riyadh and our head office was in Dammam. So they used to send us the snapshot of the data at the end of every week or maybe after 2 or 3 days, and then that was processed at the main head office facilities. So basically making copy of the database for distribution to different locations for processing. So this is true. This is true. We are looking for the one that is false. So this is true. Replication. The meaning of replication is copying, replica. Replication, creating and maintaining replica copies at multiple locations. This is true as well for distributed relational databases across multiple servers. So there is a redundancy. There is more than one data at different locations. So this is true as well. What about D then? Fragmentation. What is fragmentation? Expressed here, separating the database into parts and then distributing those parts into different multiple servers where they are needed. This is true as well. So that only leaves out these options C then. Normalization. What is normalization? Separating the database into logical tables and making it simpler for easier user processing. In this case, what we have a single location rather than this distributed servers, and this single location contains data in the most simplified form. And if you need any information or report, applications will take in the data from this database, and then the reports or whatever we need, the data can be retrieved. So normalization, remember, is separating the database into logical tables in a single location, and then we can generate reports based upon that consistent data. This would help us to reduce redundancy, reduce repetition of data, and that makes C to be what we are looking for. 17. One advantage of the database management system is, now we are looking for, again, advantage. This is important. You should be mindful of what we are looking for. Each organizational unit takes responsibility and control of its own data. Do you think it's an advantage? We have 10 departments, and if every department is responsible for controlling its own data, then it's the failure of the system. This is not an advantage, rather it's a disadvantage. So read carefully, it's a disadvantage. If every department is responsible to control its own data, then it's a disadvantage. It's a waste of time and effort and money. Wrong. The cost of data processing department decreases as users are now responsible for establishing their own data handling techniques. Again, this is not, every user has its own data handling technique. There will be inconsistency across the organization. Not a good approach, a very bad approach in fact. Data inconsistency will destroy your organization when you can't rely on the data. Wrong. C. Decrease vulnerability as the database management system has numerous security controls to prevent disaster. Decrease vulnerability as database management system. What is vulnerability? Vulnerability is a situation where you are exposed to attack. So having a database management system doesn't decrease the vulnerability, rather you are more exposed. Why? Because you now have a single location of your database, and if anything goes wrong, your system is destroyed and you lose your data. So for that, of course, we have the solution to have multiple locations of our data where we can back up, and in case there is a disaster, we can retrieve the information and process the data when needed. So this is again not the right option. Then we have to read option D carefully. And what we are looking for, one advantage of the database management system is the independence of data from the application program. Data is separate in the schema, and program is developed separately that will make use of this data, which allows the programs to be developed for the user specific needs without concern for the data capture problem. Excellent. Correct. This is the advantage of database management system, that your database contains the data, and we can now develop different application A, application B, application C, which can use the same data for different purposes. Like maybe C is a payroll system, uses the same set of data in the database. B is your letter of credit management system. A is your account receivables or accounts payable. So you have a same central reservoir of data, central storage of data, consistently recorded so as to maximize the efficiency of space. And we can develop different applications to make use of this data. We don't have to capture data again and again. Payroll system doesn't have to have its own data capture. Account receivable, they don't have to have their own separate system for data capture. Data is captured in a single location, and we can develop different applications to access what we want. That's a perfect option. Okay, next we have question number 18. Which of the following factor has the greatest impact on the design of effective management reporting system? Greatest impact, gentlemen, ladies. First, number of transactions to be processed. Well, we can have millions of transactions to be processed. This is not one of the greatest, one of the major items to be seen. When we are using computer technology, the number of transactions shouldn't matter, since we are using hardware that is smart, fast, quicker, should process lots of transactions. This is not what is our greatest concern. Number of authorized users doesn't matter, 100 or maybe 1 million or 1 billion. That's not the prime concern. Number of regulatory agencies to be satisfied, SEC, IRS, so on and so forth. So this is again not an issue. How many regulators do you think there will be? Just 2 or 3 maybe in any. Like in Pakistan we have SECP and FBR. Like in India we have SEBI, Security Exchange Board of India, and they have their text. So they're just 2 or 3, so it's not an issue. The issue is the greatest impact on the design of an effective management reporting system is the types of decisions to be made. From that management reporting system, what types of decision we want to make. That is the major concern. Rest of them ACD are not. This is the major concern we have for an effective management reporting system. What kind of decision are we going to make regarding our customers, suppliers, or markets, or so on and so forth. Right? So that makes B to be the correct option. Moving on. One of the principal objectives of database management system is to reduce the overall complexity of data processing and data storage. Well, remember, database management systems, they do not reduce complexity. In fact, they are complex systems. They rather increase the complexity of data processing and data storage. So database management system, maybe they look nice to us, we were just using from the user's point of view, but they are complex. Second, provide application programs with their own separate data files. This will again undermine the benefit of database management system. Database management system has a central single source of information, and then applications are built around the DBM so that we can extract the information for choice. So this is again not correct. Employ physical rather than logical data organization concept. Both are essential, physical as well as logical. How the system would be physically configured and how it will be existing logically in the computer system. So this is again incorrect. Then the principal objective of database system is to improve data consistency by reducing data redundancy. We keep the data in as little space as storage as possible, and since the data is central reservoir is the same, so if the different users through different applications, they when get the information will be consistent. Why? Because the information is being processed in a central location, hence there will be consistency, and rather you can say that there will be less redundancy or less repetition. That's right, that's the perfect option. D is the right option. Enabling users to have different views of the same data. This is amazing. That's what we are talking about. That you have a central database and there are different application A, B, C, D, and they are making use of the same data elements in the database. A has a different view because he is from AR. B has a different view, maybe he's seeing the accounts payable. C is involved in payroll. So users have different views of the same data. Is the function of what? It is the function of operating system. When you say operating system, you're talking about Windows. Windows is an operating system. Or maybe you're talking about Linux or Red Hat, or you're talking about Unix. These are the operating system. Not at all. We're not talking about operating system. We are talking about the database management system. So enabling users to have different views of the same data, it is the function of database management system. And that's why it is the right option. Program library management system, this is internal system of the database, not the main function of database. A utility program does a specific job for us like printing, sorting, so on and so forth. So that makes database management system to be the correct option because it will help users to have different views of the same data depending upon what you are authorized to do. Account receivable will only be able to view what relates to his specific role or job. Okay, next. An important function of database administrator is reviewing the database output for errors and omissions. This is not his job. Errors and omissions, they are handled by a separate group of professionals or group of employees called the data control group. Remember, it's a nice word, data control group. A subsection of IT department responsible for managing the erroneous or data that has errors. Data control group, or you can say users. They can identify if there is something wrong with the data. This is not the job of database administrator. Scheduling daily database operations. This is not the role of database administrator. It is the role of data entry operators. What is to be performed, what is to be entered. Not correct. Then redefining and restructuring the database so as to make it more efficient. Exactly, Hamad, you got it right. This is the job of database administrator, important function. What about D? Evaluating internal controls for hardware. This is the job of internal audit department when they conduct engagements related to IT, whether there is sufficient controls on hardware and software. This is not what the job of database administrator is. He has operational role, how well he is doing, how well there are strong controls on hardware and software. This is done by internal audit department. So D is not correct. So that makes C to be the correct option. The increased use of database processing systems makes managing data and information, what was given here, a major information service function. Because of databases of an organization are used for many different applications, they are coordinated and controlled by the database administrator. That's what we have just learned, that your common database is made use of by different users, user A, user B, user C, user D. Many different applications are built so that centralized information could be used more effectively, and this is done and controlled and coordinated by the database administrator. Now the question is, the functions of the database administrator are, we have just learned that the database administrator, no, he has no role in data input. So wherever you see data input, you can cross that option. Data input preparation, this is not the job of database administrator. So this would be one of the reasons for rejection, option A. Then database design, yes, correct. Database operation, yes. Database security, yes, perfect. B has all three elements which are the functions of database administrator. Now why not C? Database design, yes. Database operation, yes. Equipment operations, he is not involved in operations or data entry, not correct. Database design, yes. Software support, no. Database security, yes. Now you have good reasons that this B has the combination that makes perfect sense. That is the role or the function of database administrator. Then DB2, Oracle SQL Server, Microsoft Access, which is available in the Microsoft suite that contains Microsoft Word, Excel and PowerPoint. What are they? They are the library systems? No. We learnt in our theory that they are database management system. They are not programming languages. They are not access control systems. Rather, they are database management systems. Which of the following structures refers to the collection of data for all vendors in relation to database? Collection of all vendors. When you say record, record would be for a single vendor. When you say field, field will have one field will be for vendor name, one field would be for vendor's address, vendor's code and so forth. So these are the fields, field 1, field 2, field 3. But we are talking about collection of data for all vendors. When you're talking about collection of all vendors, it's a file. Remember the flow. First it's byte. Bytes make up field. Fields make up record. And many records make up file. And then files make up your database. Right? So that makes C to be the correct option. Files. This idea will be further enhanced in the next few questions. What is the correct ascending hierarchy? When you say ascending, so you're talking about this. So at the bottom, you would have byte, and of course byte represents a character. C. Collection of characters will give you what you call field. Next step is field. Collection of different fields will give you a record. Collection of different records will give you a file. That's the flow. That's the ascending order. So what you're looking for, first you should look for byte or character, then field, then a record and file. So that makes C to be the correct option. Character, field, record and file. Okay, here we go. Now, which of the following correctly depicts the hierarchy of storage commonly found in computerized databases from least complex to most complex? Come back here. This is the least complex and this is the most complex. So you should look for the same thing: byte, field, record and file. Perfect. That makes B to be the correct option. Byte, which is character, field, record and file. B is the right option. Next. An inventory clerk using computer terminal views the following on screen. What he sees the part number, part description, quantity on hand, quantity on order. What is the order quantity? The reorder point for a particular inventory item. Now collectively, this data type, clearly it is not field, because field contains only one attribute of the data. It is not a file, because file is the collection of records. It is not the database. Then what it is? It's a record of a particular component, a particular part. How many units do we have? How many have we ordered? What is the reorder level? So on and so forth. So this is the record of a particular component. And such collection of different components, records, they will give you what you call file. And collection of files will give you the database. That's what we have previously learned. Moving on. Which of the following is the elementary unit of the data storage used to represent individual attributes of an entity? Basic. Database is not basic. What we learned, the byte or the character is the base, which in fact forms the basis of field. Different fields gives you record, different records gives you file, and then this gives you the database. So since byte isn't here, then it has to be the basic is the data field, the name field, the address field, the mobile number field, email address field. That's the data field. So that's the basic fundamental elementary unit of data in the database. That makes B to be the correct option. Okay, then what is the function of data dictionary? We discussed that in our previous class. The data dictionary, basically, it describes what the database is. It defines them. So it describes and shares information about the objects and resources within the database. So it's a textbook based question. It describes the database, the different objects, how are they linked. In database, there are often conditions that constrains database records. For example, a sales order cannot exist unless there is a corresponding customer in the records. Like when you receive a sales order, it has to be supported by an existing customer in your account receivables. This kind of constraint that every sale order must be linked with an approved customer. Every purchase order in our system must be linked with an approved vendor in our accounts payable. Every employee who gets paid should have their record in the human resource system. This is called a referential integrity. There must be consistency of data there. So that makes D to be the correct option. Internal schema we discussed in our lecture. It's how the database physically configured. Entity integrity, this is something specific to each data set in the database. Like for example, in the US, every person will have a unique social security number. This is sometimes also called the primary key or the key integrity. So this social security number is a unique field which will be totally unique for every person. Right? So we got the answer. Referential integrity is our answer. Okay. So one of the 5 cycles in accounting process includes both sales to customers on credit and let me take you back. Alright. So these are your 5 accounting cycles: sales to customers on credit and recognition of receivables. Collection from cash from customers, purchase on credit, payment to suppliers, and finally your payrolls, payment to employees for work performed. So he's basically talking about the first sales cycle, sales to customer on credit. Once you sell the goods on customer on credit, it becomes recognition of receivables, it becomes your AR. So one of the 5 cycles in accounting process includes both sales to customers on credit. This was the first part of the statement, and recognition of receivables. So yes, absolutely, A is the right answer. Okay, now, this is a technical one, a good one I must say. Upon receipt of customer checks, when the customer checks are received in the mailroom, a responsible employee prepares a remittance listing of all the checks received and forwards it with the checks to the cash receipts. The remittance listing and the remittance advices should then be sent to. Now let me take you back to what we have already done in the previous chapter. I'm sure you have done these accounting cycles in much more detail. Okay, so first it starts when the customer sends you the check. The check will be accompanied by the remittance advice. What is the remittance advice? It will contain the detail that this check is for $100,000 and this is against the invoice number A1, A2 and A9. Right? So this check and remittance advice both are received in the mailroom. So what the guys in the mailroom will do, they will separate the checks from the remittance advice. Checks are sent to the cashier for deposit and remittance advices are the basis to write down the remittance listing. This remittance listing is the input document for account receivables to update the customer files. Once the customer files are updated by crediting these amounts in their accounts, we can update the customer statements and then the new accounting statements, statement of account, then they can be sent back to the customers that reflects the amount that has been collected. So this is the cash receipt cycle. So let us see what was the question all about. Now we can understand this. Upon receipt of customer checks in the mailroom, our responsible employee prepares a remittance listing of all checks received and forwards these with the checks to the cash receipts. The remittance listing and the remittance advice should then be sent to, we just saw, it was sent to the account receivable department. Account, absolutely guys, excellent. All of you got it right. So account receivable department will, when they will receive the list, all the remittance advices, they will update the customer accounts and these updated customer accounts will mean that the new statements of accounts can be generated and sent to the customers accordingly. So that makes C to be the correct option. Next, question number 33. Now what we see is we see a very simplified system flowchart. You have done much more complex one. This one is much simpler. We receive check with the remittance advice. This is received in the mailroom. Mailroom will separate the checks from remittance advice and this remittance advice is sent to the account receivable department. They will update the AR. Once the AR is updated, you get a new statement of account and this statement account is sent back to the customer. Makes perfect sense. Make perfect sense what it is all about. Now it says in the credit, sales and cash receipt system flowchart above, what is the symbol A? Symbol A is the remittance advice. This tells us that this check is for what? Absolutely, Fahad. This is the check for 100,000 against invoice A1, A2 and A9. That's what we're just talking about. So this is a remittance advice, not the auditor's test data, not acknowledgement, not credit authorization form. This is the remittance advice. That makes B to be your correct option. Moving on to the next question. Question 34, same flow. It says in the credit, sales and cash receipt system flowchart, what was symbol B? Remember, once we receive the remittance advice in the AR will update the customer files. Hence, once the customer files or customer records are updated, B will represent the new statement of account. Absolutely, Subhan. You are perfectly right. It is the new statement of account which will then be sent to the customer as a verification that the check he sent has been recorded in his account. So this is D, account statement. All right, next. Which of the following describes the most effective control to ensure proper handling of receipts transactions? So which of these, we have been given sets of controls. So out of these we have to identify which of these is the strongest control. So you have to be very careful. You will find things running over one another, but you need to read carefully. A, checks received are forwarded to account receivables for deposits daily. No, account receivable doesn't deposit. If I take you back, account receivable department doesn't receive checks. Account receivable basically receives remittance advice with the remittance listing to update the customer file. So they don't receive checks. Checks eventually are deposited to the bank by the treasurer. So this A is incorrect. So this is clearly incorrect. Checks are not received by AR. Rather they go to the cashier and then from cashier goes directly to the bank. B, a remittance listing of all checks received during the day is prepared by the mailroom and forwarded with the checks to cash receipts. Yes, let me take you back. This is correct. Mailroom will receive the checks and remittance advice. They will separate the checks and remittance advice. Checks are given to the cashier for deposit in the bank and remittance advice is given to the AR to update their account receivable balances. So that's exactly what it says in the statement. A remittance listing of all checks received during the year is prepared by the mailroom and forwarded with the checks to the cash receipts. Remember, checks go to the cashier and the remittance listing that goes to the account receivable department to update their ARs. Remittance advices are separated from checks and sent to the general ledger for posting. Absolutely not. Checks go to cashier, remittance listings goes to AR. Wrong. The employee who receives the customer mail prepares the bank deposit. Wrong. We just saw the employee who receives the checks, he will prepare the listings and check is forwarded to the cash department or the treasurer. Treasurer will deposit the checks into the bank, not the mail. This is risky. If you allow the mail person to receive the check and deposit it in the bank, he might put the check in his pocket. So we don't want that to happen. So this is clearly wrong. Question number 36. Checks from customers are received in the organization's mailroom each day. Which control should be in place to safeguard the checks? Checks should be taken by the mail clerk to the bank for deposit daily. Absolutely not. The one who has the custody. So you should not give him the opportunity to cheat, opportunity to embezzle. So if the mail clerk receives the checks and he's the one who deposits, then he can simply put the check in his pocket and get it in cash for himself. So this is absolutely not the right way. Checks should be forwarded intact to the controller for processing. Wrong. Controller has the responsibility for record keeping. So the one who has the responsibility for record keeping should not have access to the assets. Checks in this case. So this is not correct as well. Then a mail clerk should restrictively endorse each check and prepare a remittance listing of all checks received. That is correct. He should mark account pay only on the check to restrict the endorsement, and then of course he will prepare the remittance listing. This listing would be then used by the AR to update the customer file. This is the perfect option and that's why it's the right answer. Bond protection should be provided for mail clerks. Well, bond protection will help the organization to cover the losses, but this is not a preventive control. This will just compensate once the loss has happened. We want the loss not to occur in the first place, so this is again not the right option. So C is the right option. Moving on to the next option, next question. In a well-designed internal control structure in which cash receipts receives custody of checks, and I think in the next from the mailroom, the custodial function, remember the custody of an asset, the authorization to purchase that asset, and the record keeping must be kept separate. And then of course reconciliation of the asset with the record must be done by someone else. So there must be explicit segregation between these four functions: custody of the asset, the authorization to purchase that asset, record keeping of that asset, and the reconciliation of the records with the physical custody must be done by four separate individuals. This is the fundamental preventive controls called the segregation of duties. So the question says, what function should not be performed by the one who has the custody? So the one who has the custody, he can endorse the checks by marking it account pay only. So this is fine. Preparation of bank deposit slip, this is perfectly fine to deposit it in the bank. Deposit of checks daily at the bank, that is fine. So custody is comfortable and okay with ABC, but custody should not have the record keeping function, posting the receipts of account receivable subsidiary ledgers. This is not right. Custody shouldn't have access to record keeping, so that's why D is incompatible. Next question, number 38. Which of the following observations made during the preliminary survey of a local departmental store's cash disbursement cycle reflects a control strength? Let us see one by one. The treasurer prepares checks for vendors. That's what he does, based on payment vouchers prepared by accounts payable. Well, that is good. Appears to be a right way of doing things. Treasurer pays the checks for vendors based on the payment vouchers prepared by the accounts payable. What account payables does? Account payable compares the purchase order, what was requested, with the goods received note, and then they match it with the invoice that the vendor is asking for. So when they find whatever was ordered was received and same is being required to be paid by the vendor, if the things are in reconciliation, then the payment voucher will be made by the accounts payable. This is perfectly fine. Nothing wrong with it. B. Individual department managers use pre-numbered forms to order merchandise from vendors. Interesting. Why on earth would each departmental manager is being given the authority to purchase whatever they want? No. Every purchase must be routed through the purchasing department. The individual department managers, they can simply raise the purchase requisition. They cannot order directly from the vendors. This is absolutely ridiculous. I won't allow that in my company. Wrong. A liability is recorded by accounts payable once a purchase order has been received. No. Purchase order is just one component. We need purchase order to be fully in reconciliation with good receiving notes as well as the invoice by the vendor, not just the purchase order. This is not right. Payment for capital expenditures are handled by the controller. Controller holds record keeping. He should have no authority to authorize payment. Recording and authorization for similar transactions or same transactions are not allowed. This is the violation of segregation of duty. So this is wrong as well. So the only correct option that reflects a control strength is A. And that's your right answer. Okay. Question number 39. So we have a flow chart, a system flow chart, vendor, the purchasing department, accounts payable and cash payment. What we see is the vendor's invoice. Let me take you to the original system flow chart. So this is your cash disbursement cycle. The vendor invoice together with the remittance advice asking for payment is sent to the purchasing department. The purchasing department then will forward this vendor invoice to the accounts payable, and account payable will of course do the relevant reconciliation. So this is the part that we are interested in. Going back. Okay, so this B represents the payment voucher, goes to the purchasing department, then we have another document A. Let's see in the main flow chart. Yes, now this account payables department will prepare a payment voucher. So the A represents a payment voucher that then goes to the treasurer, who will then issue a check. So this basically the document A would be payment voucher. So I think in the question he is asking for symbol A. So symbol A is clearly the payment voucher. So that would make C to be the correct option. Moving on. Now B. I think the next question would ask for B. What is the symbol B? That was remittance advice. The vendor who has delivered you the goods, now he sends you the invoice as well as the remittance advice requesting you the payment. So that's remittance advice, that is B. Which of the following describes the least effective control to ensure payments are made only when goods have actually been received? After matching the approved vendor invoices with the accounts payable file, accounts payable issues a payment voucher. Yes, the purchase order is matched with the good receiving note, and then it's matched with the invoices, and only then the liability is to be settled by issuing the payment voucher. So this is good. This is an effective control, nothing wrong with it. B. Cash payments issues a check and forwards it to the purchasing after receiving a payment voucher and approved vendor invoice. This is a good check also, just like A above. Cash payment would only be made when we have received a payment voucher from the accounts payable that have matched purchase order with the good receiving note and with the invoice as well. So this is a good control. We are looking for the one that is least effective. So option C, purchasing sends the remittance advice to the vendor. Remittance advice to the vendor means vendor is being intimated that we are paying for these invoices. So of course we would have taken care of all the previous steps of reconciliation. So this is again a good check that payment is made through remittance advice to the vendor after going for these three documents reconciliation. Only then we pay. We want to ensure that we are making the payment for the goods actually received. So this is only just the last stage for the payment, but before these we have these steps where we do the reconciliation. Let's see the option D. Now option D says remittance advice is matched with the purchase order and approved for payment. How can you do that? Remittance advice is being matched with the purchase order. Where is good receiving note? Where is the evidence that we received what we order? So this is the least effective method. So that's what we were looking for. D is the right answer. To ensure the cash payment journal is updated for the total of checks requested, let's move in the reverse order. Once the purchasing approves the liability with the vendor, it's fine up to here. A check is prepared and check is sent to the vendor to the cash payments for signing and mailing. This is incorrect. This is incorrect because the purchasing department is not authorized to prepare any check. This is wrong. The check register is forwarded to the general ledger for posting of the total of the cash payment journal. This is incorrect. Cash payment journal. This is with the cashier, not with the GL group. This is wrong. Account payable posts a journal entry to the cash payment journal. Accounts payable doesn't have the authority to maintain records. B is wrong. Then it has to be A then. Cash payments prepares a check register for all checks issued during the day, and this would become the basis for the updation of your payments journal. A is the right option. Question 43. Terry processes cash payment at a car dealership. Which of the following operations should be included in Terry's job responsibility? Okay. A. Forwarding the check register to accounts payable for posting. Not at all. Account payables have no role in record keeping. Wrong. Ensuring the cash payments journal, for which he is responsible, is updated for the total of checks requested. Perfect. This is the right option. Why not C? Preparing account statement to send to vendors to show all purchase and payment activities. This is incompatible with his job. So basically accounts payable should receive the statements, not him. Wrong. Reconciling, absolutely wrong. Reconciliation is totally different thing, must be done by a person totally unrelated with custody, authorization and record keeping. Reconciliation must be done by the one who has no role in custody of the asset, no role in the authorization of purchase of that asset or the record keeping of that asset. Okay, moving on. The next question involves payroll. It involves it's a system flow chart, human resource department, timekeeping. We have to find what is A and B. So what we are looking for is the employees' clock cards are an input to B, and what is A. So let us go back to the main system flow chart related to payroll. This is for payrolls right here, and we are looking for the employee's clock card. That would be the input for the summary of hours worked, and then we were looking for this position, and this is for the treasurer. So the position B would mean we are talking about the summary of the hours worked so that we can prepare the payroll, and then this A would represent the treasury department. So employee's clock card, but the question first asks for symbol A, Symbol A represents. Symbol A was basically we just saw that a little while ago. It represents the Treasury Department. So it's going to be the cash payment. Not the general ledger, not accounts payable, not cost accounting. It's accounts. It's the cash payment, the function of Treasury. So that makes B to be the correct option. Then B, as we have just seen a little while ago, B represents what? Not the bank transfer, not the job cost records, not the employee's pay rates, rather the summaries of hours worked. We just saw that. See, summary of hours worked. So that would make D to be the correct option. Question 46. One characteristic of an effective internal control structure is the proper segregation of duties. Which of the following is a violation of segregation function or responsibility? I just told you a little while ago, custody, authorization, record keeping and reconciliation. These four functions must be segregated. Okay, hiring employees and authorizing changes in the pay rate, that is the perfect role of the human resource department. Nothing wrong with it. Approval of clock cards and job time tickets by the production supervisor. This is what he does. There is nothing wrong with it. Perfectly fine. Signing and distributing payroll checks. This is the job of Treasury. They sign and they are the one who distribute, and they are the one who keep the unclaimed checks. So this is perfectly fine. What is not fine is preparation of paychecks and check distribution. You are the one who are preparing the check and you are the one who are distributing, so you can just put it in your pocket. You can just put checks in your pockets. Do not confuse it with option C. It's signing and distributing. Preparation of paychecks is different than the check distribution. So basically they are both authorizations. Can be done by the same department. But here the custody and the authorization, they are confused. So this is not allowed. Violation of the segregation principle. Hence D is the right answer. Okay, an employee in payroll is contemplating, thinking carefully, a fraud involving the addition of a fictitious employees and an entry of fictitious hours worked. This fraud is being planned. The paycheck of this fictitious employee would then be sent to the payroll employee's home address. So a fraud is being contemplated where a fake employee would be added, fake working hours, a check would be prepared that would go to this employee's home address. The most effective control procedure to prevent, mind the word, to prevent this type of fraud is to require that all new employees added are approved by someone outside the payroll, so that the employee in the payroll cannot add anything of his choice. This is the perfect solution of this problem. All new employees added are approved by someone outside the payroll. Payroll should have no authority to add any employee. This is the perfect control, perfect preventive control. Let us see why not the others. All new employees and their hours worked are entered by human resource department. So this is incorrect because all new employees are added by the human resource department, but their hours worked, this is the job of the payroll, not the human resource department. And moreover, it will not prevent the addition of fictitious employees. It's not a right option. All changes to employees' records are approved by the supervisor outside the payroll. We are not talking about the changes. We are talking about the addition. There can be changes in employees that their payroll or their hourly rates of the existing employees, but we're talking about the addition of new fake employees. So this is not a good control. Employees use direct deposit for paychecks. So there are employee A, B, C, D. The money goes directly into their bank account. How would it identify which of them are genuine, which of them are fake? So this will not prevent the payment to a fake employee. This is the best control. A is the right option. Question 48. Human resources and payroll are separate departments. Which of the following combination provides the best segregation of duties? First, human resources reviews and submits payroll hours to payroll for processing. Absolutely not. HR has nothing to do with it. This is the job of the supervisor of the relevant departments. Wrong. Human resources adds employees. Fine. Payroll processes hours and enters employees' bank account number. Paychecks are automatically deposited in the employee's bank account. This is the right thing. This appears to be the perfect arrangement. What one department should do, they are doing. HR is responsible for employees' additions, hiring, firing. Payroll is the one that processes the hours and then enter the detail about employees' banks. Why not C? Human resources is responsible for hiring, firing, and changing pay rates and deduction. This is fine as far as this first statement is concerned. Payroll approve hours worked and authorize overtime. No, payroll has nothing to do with the approval of hours. This is done by the supervisors of the relevant department. Wrong. Payroll adds employees. Absolutely incorrect. Payroll should have no authority to add employees. This is the job of the HR department. Next. Management is concerned about the potential for unauthorized changes in the payroll. Which of the following is the proper organizational procedure to prevent such unauthorized changes in the payroll? That's what we're interested in. Payroll reconciles clock cards and job time tickets. This is wrong. This is the job of timekeeping department, not the payroll. Wrong. Paychecks are distributed by human resource. No, paychecks are distributed by treasury. C. Human resources authorizes the hiring, pay rates of all employees. Perfect. Perfect. This is the job of the HR department. This is the right thing to do. This is the right thing. What we are looking at, which of the following is the proper organizational procedure to prevent such an unauthorized changes in the payroll? HR is the one that authorizes the hire and pay rates of all employees, so that no one else can make the change. Correct. Bank transfers for payroll and payroll taxes are executed by accounts payable. No, that is the work of cash payments, not the accounts payable. All right. Organizational independence in processing of payroll is achieved by segregating functions that are built into the system. Which of the following functional segregation is not required for internal control purposes? Which of these segregation is not required? Okay. Segregation of timekeeping and payroll preparation. Yes, we need segregation here. We're looking for the one where there is no requirement for segregation. Segregation of payroll preparation and check distribution. Yes, we need segregation here. Segregation of payment voucher preparation done by accounts payable and cash disbursement is done by treasury. Yes, they must be segregated. The question says where segregation is not required. Segregation of initiation and execution of bank transfers for payroll. Initiation and execution, they are both with the treasury. So if treasury is doing all these, it's perfectly fine. Here, the segregation is not required. So that makes D to be our correct option. Next. Clock cards and job time tickets are reconciled before summary of the hours worked by job and hours worked by employees are forwarded to payroll. What control is embedded in this reconciliation? Which reconciliation? Reconciliation of the clock cards and job time tickets. They are reconciled. Clock cards, every employee will have a clock card containing the details of hours worked, and then these hours are then transferred to various jobs. So job time tickets, if show 100 hours, these 100 hours should be the sum of different clock cards data. So this reconciliation is necessary. So what control is embedded in this reconciliation? Let's move in the reverse order. The process ensures that employees are authorized to work. We don't see authorization of work. Just comparing the clock cards total and the job time tickets and reconciling them. The process ensures that employees work only authorized hours. This is not a check for seeing whether the employees work for authorized hours. We are reconciling the time in clock cards and job time tickets. This will not serve the purpose. The process ensures that employees are paid the proper amount. There is no mentioning of rate. Just we are comparing the hours worked. Yes, the process ensures that the employees are paid for actual hours worked. This reconciliation would ensure that what is on their clock cards is what being paid for in the payroll. So this is the right option. A is the correct option. Moving on. Okay, so we have here vendor, receiving department, purchasing department has a document here is A, and then we have another B. Let us go to the accounts payable and purchasing cycle, and then we'll see what do we have here under purchasing, accounts payable, and then the final documents generated by the receiving and the accounts payable. This is your complete purchase payable cycle. So purchasing department will receive the purchase requisition from inventory control. This purchase requisition is what we are looking for in the question. So this is the first. And then once cycle starts, the second document shown there in the flow chart is the receiving report. The accounts payable will compare what was requested with what was raised in the purchase order versus what was received by the receiving department, right? So you can see here, this is the receiving report, this is the purchase requisition, and it is reconciled here. So these are the two documents involved in the flow chart. So A was the purchase requisition. That's what we just saw. The purchase payable cycle flow charts, symbol A is the purchase requisition. That makes B to be the correct option. And if you remember what we were doing, we received a receiving report, and this receiving report was reconciled with the purchase order and purchase requisition. So I think that would be the next requirement B. What is the document B here? The document B is the receiving report. We just saw that a little while earlier. Which of the following is most effective in providing assurance that recorded purchases are free of material errors? A. Receiving department compares the quantity ordered on the purchase order with the quantity received on the packing slip. Let's go back to the main flow. Now, remember, the receiving department only receives the purchase order with the items ordered mentioned. There is no quantity mentioned here. No quantity and amount is mentioned in the copy of purchase order that is with the receiving. Why is it so? Because we want the purchasing department to go for an independent count. There should be no mentioning of the quantity on this version of the copy of the purchase order, so that the receiving department will conduct an independent count. Remember, this is an important point. The purchase order version with the receiving department has only the items mentioned, what are ordered. There is no mentioning of quantity or price, so that when they count, they will go for the actual physical count to draw the receiving report. So A is incorrect. B. Purchases are approved before ordering from the vendor. What we are looking for, most effective in providing assurance that recorded purchases are free from material errors. I mean, what we order, we actually receive. So this won't help the purpose, whether they are from the approved vendor or not. Receiving reports require the signature of individuals who authorized the purchase. There is no such requirement. Receiving report will only mention what is the quantity actually received and doesn't require any authorization from the purchasing department. D. Accounts payable compares the receiving report with the purchase order. Exactly what was ordered and what was actually received. This reconciliation is done by the accounts payable, and then they generate the payment voucher. So D is the right answer. A well-designed internal control system, the same employee may be permitted to do what? Locate authorized vendors and prepare purchase order. This is the perfect role of the purchasing department. There is nothing wrong in it. This is perfectly what is done. So same employee in the purchasing department can locate authorized vendors and prepare purchase order. Perfectly fine. There is nothing wrong with it. What about the others? Prepare receiving reports and approve purchase orders. This is incompatible. Receiving reports are prepared by the receiving department and purchase order by the purchasing. These are incompatible roles. You are the one who is preparing purchase order. You are the one who is preparing receiving reports, so you can misappropriate inventory. Not good. Approve vouchers for payments and access unused purchase orders. This is again incompatible. Account payable prepares the vouchers and the purchase orders are with the purchasing department. So two incompatible jobs. Prepare purchase requisition and update journal record. Authorization and record keeping must be segregated. That is why D is also incorrect. Next. The manager of a production line has the authority to order and receive replacement parts for all machinery that requires periodic maintenance. Interesting. You are the one who are ordering, you are the one who are receiving. This doesn't fit well. I don't find this convincing. The internal auditor received an anonymous tip that the manager ordered substantially more parts than necessary from a family member in parts supply business. The unneeded parts were never delivered. Instead, the manager processed receiving documents and charged the parts to machinery maintenance accounts. See, clearly is a fraud. The payments for the undelivered parts were sent to the supplier and then divided between the manager and the family members. Which of the following internal control would have most likely prevented this fraud? Clearly, we need to separate the ordering and receiving. This is not his job. Purchasing department must place the order and receiving department must receive. So look for these two only. There must be segregation between the receiving function and the authorization for the parts to be purchased. This is the problem. There is no other problem. So don't waste your time. Just go for the correct kill. But I would recommend you need to read why this is not correct. Establishing predefined spending levels of all vendors during the bidding process. The problem is not with the limit of purchasing. The problem is that unauthorized purchases are being made and embezzled. Internal verification of quantities, prices, and mathematical accuracy of vendors' invoices. He's himself doing it. How can he catch himself when he's stealing? Receiving reports are forwarded to purchasing where they are matched with the purchase order. Here, the fraudster himself is preparing the receiving reports, himself preparing the purchase order. So they will always be in reconciliation. There is even no benefit of comparing or making such comparisons. The initiation of the purchase of material and supplies is the who starts the process. Inventory control. Inventory control will raise a purchase requisition, forward to the purchasing department. That in turn issues the purchase order. Let me show you. You can see inventory control. It starts with the inventory control. Purchase requisition is drawn up and then given to the purchasing department, which in turn gives or raises the purchase order. So that makes C to be the correct option. Next. Multiple copies of the purchase orders are prepared for record keeping and distribution, with the copy of the purchase order sent to the vendor and one retained by the purchasing. In addition, for proper informational flow and internal control purposes, a version of purchase order would be distributed to all of the following except, let's see. We have accounts payable, receiving, inventory control, and warehouse. Now this is the purchase order raised by the purchasing department. It goes to the accounts payable, receiving, and of course the vendor that will send. There is no requirement to give any purchase order to the warehouse control where the physical inventory is placed. So that would be your right option. Warehousing. Inventory control, yes. Receiving, yes. Accounts payable, yes. But not the warehouse. A preliminary survey of the purchasing function for an activity or entity indicates that department managers initiate purchase requests that must be approved by the plant superintendent. This is perfectly fine. Purchase orders are typed by the purchasing department using pre-numbered and controlled forms. Perfectly fine. Buyers regularly update the official vendor listing as new sources of supply become known. Buyers, the purchase agents, they are authorized to add any vendor they want. This is questionable. I find this is something that can welcome some fraud. Rush orders can be placed with vendors by telephone but must be followed by a written purchase order before delivery can be accepted. Perfectly fine. Excellent arrangement. Receiving sends the receiving report and packing slip to the inventory control before updating inventory. This is perfectly fine. Excellent arrangement. What I find inappropriate is this. Buyers regularly update official vendors. So what could be the result of this weakness? One possible fault of the system is that purchases could be made from vendors controlled by the buyers at higher than normal prices. This is what can result from the highlighted weakness. This can happen. Definitely it will happen. Unauthorized purchases can be made by department managers. No, since it has to be approved by the plant superintendent, so this is not possible. Inventory may be updated before goods are actually received. No, inventory control will only update when the good receiving reports are received. This is incorrect. Goods may be received before the purchase order is prepared. Yes, we may, because it's a rush order, so it's perfectly fine. Later on it can be done, so this is not an issue. So A is the right answer. Okay, here we have another accounting cycle question. Customer gives the customer order received by the sales department. Sales department will then raise a sales order given to the credit to see whether the customer should be given credit. Once the credit is approved sales order is then given to shipping, and then the order is delivered. Once it is approved, then the sales department will send an acknowledgement to the customer that the order has been approved and the goods will be sent on that or that date. So A basically is the acknowledgement. Let me show you. See, customer acknowledgement is sent to the customer. So this is acknowledgement. So we're looking for A. A is acknowledgement. So that makes B to be the correct option. Then we have B. Let us see what B is in the whole scheme of things. B is in fact invoice raised by the billing department. This invoice is then routed through the sales department to the customer. Customer then can match what he originally ordered, what was the acknowledgement, what was the goods actually received, and what now the vendor is asking for. So this basically is invoice. So in the next part, definitely we'll ask for B. What is B? B is invoice. Next. Before goods can be shipped, which of the following steps in the sales receivable process must occur before the goods can be shipped? Billing completes an invoice for the goods and mails to the customer. This happens after the goods have been delivered. We are looking for the steps in the sales receivable cycle before goods can be shipped. So this is clearly after. Invoice is raised after the delivery. Account receivables post the transactions to the account receivable subsidiary ledger. This is again after delivery. Inventory control updates inventory records for the goods to be shipped. This is incorrect. Inventory control will update the inventory record once it receives the approved sales order in the packing slip from shipping. This is not correct. Then the shipping copy of the sales order is matched to the packing slip. Let me take you there. This is the correct option, by the way. Let me show you. See now, shipping will compare the approved sales order with the goods received from the warehouse, a packing slip that is drawn by the warehouse, and then bill of lading. And then after all these documents are prepared and matched, then the goods are sent with the packing slip and the bill of lading. So that's the write-off. An auditor wants to confirm that every item shipped has an associated sales order. So from what source will the auditor take his or her sample? Okay, now, not the sales order. Sales order is not a surety that the goods have actually been delivered. Invoices again is not assurance. What you should see is the packing slip and bill of lading. They are generated when the goods are about to be shipped. So this is where he should start his work from. What he wants, an auditor wants to confirm that every item shipped has an associated sales order. So he should start from the packing slip and then reach to the sales order, the corresponding sales order. Then billing matches the sales order to the shipping copy it holds. This procedure is for what? Let me show you. See, billing will match the approved sales order with the packing slip and bill of lading, and then that invoice would be raised. So what we're looking for here, billing matches the sales order to the shipping copy it holds. This procedure ensures that goods shipped are charged to appropriate customer. There's no such thing, they don't have customer details. Goods shipped are invoiced to customers. The goods that have been shipped, there should be a corresponding invoice raised. So that makes B to be the correct option. An organizational independence is required in the processing of customer orders in order to maintain an internal control structure. Which of the following situation is not proper segregation of duties in the processing of orders from customers? Not a proper segregation. Let's see. Approval of credit of sales order is prepared by sales. It's perfectly fine. This is what happens. Shipping of goods by shipping that have been retrieved from the stock by warehouse. This is what is done. This is perfectly fine. Approval of sales credit memos because of product returned by the sales and with subsequent posting to the customer accounts by account receivable. Account receivable has absolutely no authority to approve the sales credit memo. They do not have the authority to. Someone at the senior position in the organization is responsible for giving the customers credit notes, not the account receivable department. This is not right. Record keeping and authorization must not be with the same person or same department. Then this is weakness. This is not a proper segregation. What about D? Invoice preparation by billing and posting to the customer accounts by AR. Perfectly fine. Invoices are prepared by billing. Posting is done by AR. Perfectly fine. Nothing wrong with it. C was incorrect. Which of the following procedures ensure that all inventory shipments are billed to the customer? The shipments have been made, are actually billed. Invoices have been raised. So the correct way of doing it, that you need to have your sequentially arranged shipping documents, and there must be accounted for by the corresponding invoices. If there are 10 shipping documents, there must be 10 corresponding invoices. Right? So shipping documents are pre-numbered and are independently accounted for and matched with the sales invoices. Look no further. That's your right option. Upon the receipt of packing slip from A, inventory control should match it with approved vendor list. Let me take you there what exactly is being discussed. Then I will come back to the question. So packing slips are received by shipping, billing and inventory control. So now the statement would be, upon the receipt of packing slip from list A, shipping, sales is totally wrong. There is no packing slip for billing or warehouse. So what happens is either going to be A or B, A or D. It's going to be either A or D. And let's now fill in the space. Upon the receipt of packing slip from shipping, inventory control should match it with the approved sales order and update the inventory records. That makes perfect sense because inventory control maintains the inventory records and they update the records once the goods are sent out or received. If we go for D, upon the receipt of packing slip from warehouse, inventory control should match it with the approved sales order and send the invoice to the customer. This is wrong. Inventory control doesn't issue any invoice, so that makes D to be the incorrect option. A is right. A database management system can best be defined as a management system that controls disconnected master files. Of course not. Database management system basically is a program that manages a set of interrelated, centrally coordinated files. Perfect description of the database management system. And that ends your accounting information system questions.